Here's what nobody explained to me about coverage limits until I had to think through my own policies. This is coverage clarified, insurance explained calmly, with no sales pitch. By the end of this video, you will understand exactly what a coverage limit is, how it works on a real policy, and the practical questions that help you decide whether a limit feels sufficient for your situation. This is general education only, not financial or insurance advice, and everyone's circumstances differ, so you will still want to speak with a licensed agent before making decisions. One specific point that almost everyone overlooks when they first look at their limits is still coming up, and it changes how many people approach the numbers on their declarations page. A coverage limit is simply the highest amount the insurance company will pay for a covered loss under that part of the policy. It sits on the declarations page, which is the summary sheet that lists your coverages, premiums, and limits. When a covered event happens and you file a claim, the insurer reviews the damage or loss and pays up to that stated limit after any deductible is applied. The premium you pay each month or year is calculated in part based on the limit you choose. So a higher limit generally means a higher premium, while a lower limit generally means a lower premium. The key is understanding that the limit is not a guarantee of full replacement or full payment. It is a cap. Many people assume their policy will cover whatever the loss turns out to be, but the limit is the boundary the insurer has agreed to in the contract. A coverage limit is the maximum dollar amount an insurer will pay for a single covered claim, or, in some policies, across all claims during the policy period. It is written directly into the contract, so both you and the insurer know the boundary ahead of time. For example, if your homeowner's policy lists a limit on the dwelling coverage, that is the most the insurer will pay to repair or rebuild the home after a covered peril such as a fire or storm. Any costs above that limit fall back to you. The same principle applies in auto insurance, where bodily injury liability limits cap how much the insurer will pay to others for injuries you cause in an accident. The limit does not change based on how expensive the actual repair or medical bill turns out to be. It is a hard ceiling. Policies also distinguish between per-occurrence limits and aggregate limits. A per-occurrence limit applies to one event, while an aggregate limit is the total the insurer will pay across multiple events in the same policy year. Knowing which type appears on your declarations page helps you understand the protection you actually have. This distinction is something to ask your agent to point out when you review the policy wording. When a loss occurs, you file a claim. The insurer sends an adjuster to assess the damage, and the adjuster calculates the covered amount. Payment then stops at the coverage limit even if the total loss is larger. If your auto policy carries a limit of a certain amount per person for bodily injury liability, and the other driver's medical bills exceed that amount, you may be responsible for the difference. The same mechanics apply to property damage limits and to homeowners' coverage for personal belongings or liability. Some policies also include sublimits, which are smaller caps inside the main limit for specific items such as jewelry or electronics. These sublimits are listed separately and are often much lower than the overall coverage limit, so it is useful to locate them on the declarations page. Because the limit is fixed at the time the policy is written, inflation in repair costs or medical expenses over the years can make an older limit feel less adequate. That is why many people review their limits periodically rather than leaving them unchanged for many years. The question of whether your current limit still matches today's costs is one to bring to a licensed agent. Coverage limits appear in nearly every type of insurance, but they function a little differently depending on the policy. In auto insurance, you will usually see separate limits for bodily injury liability per person, bodily injury liability per accident, and property damage liability. In homeowners insurance, the main dwelling limit covers the structure, while a separate personal property limit covers your belongings, and a liability limit covers legal costs if someone is injured on your property. Renters insurance uses similar categories, but without a dwelling limit because you do not own the building. Health insurance uses terms such as out-of-pocket maximum, which functions like an annual aggregate limit on what you pay, and lifetime maximums that some plans still carry. Because the wording and categories differ, it is helpful to ask the agent to walk through each limit on your specific declarations page and explain what is covered up to that amount and what is not. The same limit number can mean very different things on two different policies, so comparing them side by side requires knowing the categories involved. Choosing a limit involves weighing the potential cost of a loss against the premium you are willing to pay. A higher limit generally raises the premium, while a lower limit generally lowers it. The decision is personal and depends on your assets, your risk tolerance, and the laws in your state about financial responsibility after an accident. One practical step is to list your major assets and consider what portion of those assets could be at risk if a claim exceeded the limit. Another step is to look at recent local costs for home repairs, car repairs, or medical care so you have a realistic sense of how far a given limit might stretch. Because these costs change over time, many people choose limits that leave a margin above the minimum required by their state or lender. The one point almost everyone overlooks at first is that the limit you set today may need to be revisited whenever your assets grow, your family situation changes, or local rebuilding costs rise. That review step is what turns a policy number into protection that still matches your life. Raising a limit increases the premium, so the question becomes whether the extra cost is worth the additional protection. Some people keep lower limits to save on premiums and accept more personal responsibility, while others prefer higher limits for greater peace of mind. Both choices can be reasonable depending on individual finances. A common gap appears when people focus only on the main limit and overlook sublimits or exclusions that cap coverage for certain items or situations. Another gap occurs when inflation or rising repair costs push the real-world expense above the limit that was adequate several years earlier. Umbrella policies are one option many carriers offer to extend liability coverage beyond the limits on your auto or home policy, but they usually require you to maintain certain base limits first. Whether an umbrella policy makes sense for your situation is another question to discuss with a licensed agent rather than deciding from a video. The goal is simply to understand that limits are tools with clear boundaries, not unlimited protection. When you sit down with a licensed agent, bring the declarations page from your current policy and ask these specific questions. First, what is the exact coverage limit for each major category, and is it a per occurrence or aggregate limit? Second, are there any sublimits that apply to items I own or situations I face regularly? Third, how would a claim be handled if the loss exceeded the limit, and would an umbrella policy be available to extend coverage? Fourth, when should I review these limits again, and what life changes would make a review especially useful? Fifth, how does raising or lowering a particular limit affect my premium, and are there any discounts tied to higher limits? These questions give you concrete information about your own contract instead of general rules. The answers will vary by insurer, by state, and by your personal circumstances, which is why the conversation with a licensed professional is the next step after watching this video. A coverage limit is the maximum amount the insurer will pay on a covered claim, and it is listed on your declarations page. Understanding how that cap interacts with deductibles, sublimits, and actual repair or medical costs helps you see where your protection ends and your own responsibility begins. The single most useful habit is to review your limits periodically rather than leaving them set for years. Ask your licensed agent to walk through each limit on your policy, explain any sublimits, and show you the effect of raising or lowering them. Subscribe to Coverage Clarified for more plain English guides that walk through one insurance concept at a time. The plain English guides and any quote comparison links are gathered in the description. Remember, Coverage Clarified is general education, not financial or insurance advice. Everyone's situation is different. Prices and rules change and vary by state. So always talk to a licensed insurance agent or a qualified financial advisor, and check current details with an official source before making any decision.